Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Monday, February 2nd, and this is your New York Open Prep. Two big themes today. A shifting U.S. policy backdrop is lifting the dollar and rattling precious metals, while global manufacturing readings show improvement, but with hints of softer demand underneath. The nomination of former Federal Reserve Governor Kevin Warsh as the next Fed chair is being felt across assets. The dollar is recovering from recent lows, with traders noting the move in pairs like dollar-franc, and attention turns to the U.S. Institute for Supply Management manufacturing survey due shortly. We've already seen the final S&P Global Manufacturing Gauge at 52.4, the best since mid-2022. But production is outpacing new orders, and inventories are piling up, a sign momentum could cool unless demand firms. In Europe and the UK, the FTSE 100 hit a record as the precious metals sell-off eased. UK manufacturing strengthened, with January's survey at 51.8, adding to expectations the Bank of England will keep rates on hold this week. The euro and sterling are steady, ahead of both the Bank of England and European Central Bank decisions. Meanwhile, Russia increased pipeline gas flows to Europe via Turkstream versus a year ago, a reminder that energy routes into the continent remain in flux. Commodities are volatile. Gold and silver tumbled late last week on the policy shift, then stabilized this morning, with some on Wall Street framing weakness as a chance to add. Silver remains under pressure as geopolitics cool and the market reassesses the U.S. outlook. Oil is firm, with Brent up strongly in January amid tensions, and OPEC Plus overproducers including Iraq, the UAE, Kazakhstan and Oman have filed plans to compensate for prior quota overshoots through June. In the sector, another merger is on the tape, though investors aren't cheering this one. Equities' tone is mixed. Emerging markets have started the year strongly, with the MSCI EM index up roughly 11% in dollar terms, versus a modest gain for the U.S. benchmark. Big tech is more cautious, with Nvidia shares softer on reports its OpenAI investment has stalled. And there's chatter in Europe about building a kill switch to reduce reliance on U.S. platforms, a potential headwind for some names. In currencies, HSBC says 2026 could be the year of the yen, as Japanese bond yields firm, and the Aussie dollar is bid into a widely expected Reserve Bank of Australia rate hike. Turning to market focus, a firmer dollar and better U.S. manufacturing headlines are a mild headwind for gold and silver, while oil stays underpinned by supply discipline and geopolitics. European gas flows ease some regional risk premium. Risk appetite is supported at the margin by emerging market strength, even as tech sentiment looks more selective. Looking ahead, the U.S. ISM manufacturing survey is the key release today. Later in the week, the Bank of England and the European Central Bank decide on rates, and the Reserve Bank of Australia is in focus as well. Otherwise, it's a moderate calendar. What you should be watching today: the Aussie dollar against the U.S. dollar, looking for an uptrend if the RBA delivers a hike as expected. The dollar versus the yen, where a stronger yen bias could cap rallies if Japanese yields keep climbing. The dollar against the Swiss franc, with a recovery attempt still in place, but fragile. In commodities, watch gold and silver for stabilization attempts after last week's plunge, and Brent crude for follow-through after January's surge. For North America, the U.S. dollar against the Canadian dollar may trade two-way, with oil strength supportive for the loonie, but U.S. policy and data keeping the dollar firm. The takeaway: policy expectations are resetting, just as manufacturing shows early signs of life, and that mix is injecting volatility into metals and currencies while keeping oil supported. Markets are constructive, but selective. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.